Okay, so I got cut off there, but I just want to finish with this. So we figured out our dividends because it's between net income and the increase in retained earnings. So we got the difference of that, but now we need to know how much was cash and how much was dividends payable. So we look for dividends payable. Sometimes it's not here, so you just ignore it. It went up $4,700, which means out of this amount, this much was put on account and the rest must have been paid in cash. So the way we got the cash was we took $84.60 minus what was put on dividend payable. So we didn't shell the whole thing out in cash. Dividends payable went up, so we only shelled out $37.60 as a use of cash in the financing section. Okay, so by figuring that out, we don't have to do anything with dividends payable then. We've used it as much as we need to. Okay, another thing we always have to check for is depreciation. So depreciation expense, because if you've got capital assets, there's going to be depreciation. Let's go back and look on it. Is there anything here for depreciation? The second point says $9,400 in depreciation expense. Now this depreciation expense will sometimes be separated out, but notice they said it was included in operating expenses. So it's in here. So where does that go? It's in operating, and we add. We don't put any of this OCI stuff in it, so that's just a little X. And the last thing I want to do is go back to page 8. And you'll find that with these questions, you're going back between additional information, then the statements, and then additional information and the statements. So you kind of expect to flip-flop back and forth. You just start working through one. Usually the statements are the easiest, and then go to the other ones, but it works both ways. Okay, so in our little analysis we had to do, if you remember, there's equipment, and we found purchase for cash, so it goes to investment, use of cash. And in long-term notes payable, we paid off the notes payable for $404, so it's in finance and it's a use of cash. Now there's one more amount that we have to see what we're doing. During the year, Martinez acquired $75.20 of equipment in exchange for long-term notes. So it would normally go in investing for equipment and financing for note payable. However, what happens if we exchange one thing for another without cash and without a bank or someone issue the loan? We just write a note. So this is going to be a note at the bottom of the statement. So we're going to do anything with that little guy. We're not going to do anything with that little guy because it was in exchange. If it said Martinez acquired, that meant in exchange for a loan they took out from REC. Is there a third party involved? Yeah, if there's a third party involved, then this will show up and this will show up. This will be investment, this will be financing, and it won't just be a note. Okay? So this is usually investment and equipment, investment equipment, finance, note payable, but only in exchange of non-cash cash. So it's the note at the bottom of the statement, okay? So I'm just going to put a little red X through that because we're not going to use this because it was only in exchange with the two parties. Okay, so now we've got everything done that we need to put the statement together. So, just going to grab a piece of paper, I'll be right back. So the best way of doing this statement is to do this format. Write it down yet, I'll give you time to do it on page 10. Your statement title is going to be up here. Then what are our sections? We have operating activities. We have, and we total each section. So section 1, operating activities, and then we'll have cash provided or used by operating activities. And usually this is the largest section. So, second thing is investing activities. So that's all provided. Cash provided by investing activities. And then our last little section is going to be financing activities. And you're going to list all the things. And then you're going to have cash provided, used by financing activities. And then we will have, and this is the kind of the section we show, the bottom of the statement, net increase or decrease in cash. Net increase or decrease in cash. And then we have the cash balance. Ending cash balance. So, this is going to be our little number 1. This is our 2. It's here for 2. Balance here for 3. This is going to be 1 plus 2 plus 3. And then the beginning in cash. Sorry, when we add this to cash, we should get ending cash. Whoops, sorry about that, I didn't show you. Okay, I'll just leave that there for a sec. So when you're first doing this, instead of trying to first find all the operating activity, it's good to just start, say, with this statement. Statements, go down each one and put them in. Okay? So, what I want you to do is hit pause after I finish telling you what to do. That doesn't make too much sense. And you're going to go down pages 9 and 8. So maybe you'll start here. And, for example, beginning and ending cash should go at the bottom of the statement. This will just plop into, you'll say increase in accounts receivable. It goes in operating subtract. Now, oh, I forgot to write it down here. Where does netting go? That goes at the start of operating activities. The other thing you want to look for while you're is any losses. That's pretty good now. Here's an unrealized gain, which is like a gain. We don't count it because it's OC. Are there any non-cash losses or gains? If it hasn't separated it out, it would have to tell you in the additional information. It didn't say anything like that in the information, and there's no loss or gain. So, don't need to worry. So I'll just put a little note here, check for losses and gains also. Okay, so you're just going to take your little list here and put it in here where everything belongs. And just you can do it on page 10, just make sure you do it in pencil, and then we'll go through it. Okay, so I will see you at the next video. Make sure you give it a try because you've already done this statement. It's not a new statement to you. So give it a try and start putting the pieces together.